During a long-term uptrend, a double top marks the 1700 area as a crucial support for the continuation of the climb higher. While there are characteristics similar to an ascending triangle, it is more sensible to classify this as a regular uptrend and role reversal of 1700 as current support emerges following a wider and less strict failed triple top. It is also quite normal for the extended horizontal trading range following the break over the clear uptrend line. 1700 holds firmly, leading to a failed double top. After a rapid reversal, a clear decline places 2000 out of reach and defines it as the current peak. The two trend line variations are helpful in identifying a more comprehensive outline of a potential descending triangle. As usual, there is an upper trend line focusing on encompassing downswing highs, and a lower trend line focusing more on encompassing the open and close prices from real bodies forming the downswings. The wider base formed by the 1920 to 1875 range is mainly influenced by the larger bull hammers, open and low prices on August 12th. Like normal, it is necessary to wait for conclusive clearance of the lower boundary until a downward continuation can be declared. The current bull hammer keeping contact with 1875 certainly doesn't meet the conclusive criteria of a definitive break, as it represents neutral to bullish sentiment in the short term. This pattern has decreased in certainty, but is not decisively invalidated yet. Price still remains mostly within the pattern's outline. It could be said the pattern already completed in late September, if a smaller version of the descending triangle is highlighted, with the pattern defined more heavily by closing and opening prices. Though that would be too strict adherence to theory, the more comprehensive but wider outline is more realistic to account for volatility and dynamic short-term developments. The descending triangle is invalidated to a degree due to delayed completion and increased volatility towards November. However, overall bearish sentiment continues the existing downtrend. This is more a result of a classic bearish continuation in the same 1920 to 1875 range, rather than the completion of a strict descending triangle that still provides helpful trend lines. Similar to the start of the example, a clear incline is best classified as a regular bullish reversal and uptrend from the 1780 level. There are characteristics similar to an ascending triangle, especially with the 1875 level being analogous to the upper resistance range. But the context is not sensible. This is because it is during an established downtrend and persisting bearish sentiment that soon takes price back down towards the start of the relatively small uptrend. In some examples seen before, the incline from a bullish reversal can be shared with an ascending triangle that forms to rapidly accelerate the uptrend. There is a similar situation here on a small scale. But unlike other examples, this did not lead to an immediate reversal of the larger downtrend and a drastic reduction in bearish sentiment.